company report. Today, Bitcoin seems to be recovering after a tough days that we were living, where we went to 62. All the people, all the bears came out to say we are going to zero. All the bears came out to say Sailor will be liquidated and criticizing him. But here we are, another day, and I am pleased to introduce Immortal. How are you doing?
Hi, guys. Yeah, we have a little bit of a breather since the morning when the Asian market opened up. Let's see how long it lasts this time.
Yes, and in Indonesia, we have Batis Toshi. How are you doing, Marco?
Guys, I'm doing great, and yes, ready for another episode together, and hopefully Bitcoin will keep this uptrend move. Let's see.
Before starting, I don't know if we discussed with you, but do you see that, because we believe that 60K is the bottom. Of course, it can go down, but we strongly believe that is the bottom. How about you?
I think it's possible. I would put like a pretty decent percentage. I don't know if it's like around 40-50% that the bottom is in. We need to see over the next weeks if there is like a strong rebound and some recovery on maybe the short-term time frames on some moving average or some big volumes that might signal that the worst is behind us. I think it's this kind of price discovery now in which both the bears start to be a bit skeptical because, again, the drawdown was very severe, and maybe to gain some conviction back on the bulls. So I think we need some more weeks, maybe a couple of more months to understand if the worst is behind us. So yeah, I would say 40-50%. The bottom was around the week of 59K, I think. And yeah, we need to see also on the macro side. It's still pretty messy. Every day there seems to be like a big news that reshape everything. So this thing normally resolve with time, a bit of time.
Yeah, today Trump was speaking in the morning, the State of Union, something like that. That is that the day that he goes to the Congress and he speaks about all what he's gonna do during the year. Mm-hmm. The price didn't move so much, so I think that he didn't say any crazy stuff. But let's see what happens.
I was trying to find it, but I couldn't. There was actually Polymarket showing that probability. I think I heard it was something like 43% that we can still go down below 60K on Polymarket, and it was like 10% that we go down to 50 or 55. I don't remember exactly.
And the probabilities of Bitcoin going to 150 went up because last week were 5%. And the probabilities of Jesus Christ coming back were 6%.
Yeah, we are living in wild times, actually. We can bet on the return of Jesus. I mean, it's
return of
gambling mode, pure gambling mode. It's crazy.
But the one who created that one is kind of a genius, because think about the number. What does it mean 6% for the return of Jesus at any time? 6% for, well, by the way, but what time he say? It's 2 years.
I think 2027.
So it's actually the one who opened that trade. It's taking a little bit more than the free risk rate.
Yeah.
So he's doing some kind of arbitrage. Obviously, Jesus not coming, he will gain 6%, which is more than the risk-free rate. So maybe someone doing some kind of arbitrage on Polymarket.
And I don't remember my times in the Dominical school at the church, but if Jesus comes, it's because we are on the end of times.
Don't remember.
I don't remember what happened. How about you, Marco?
I mean, yeah, I'm not an expert, but yeah, if he comes back, it should be like some kind of apocalyptic end. So yeah, I don't know. But yeah, it's funny to see. I mean, 6% it starts to be quite substantial. So I don't know. People are pretty bullish on the return of Jesus at this point. I don't know.
How do you verify the bet, actually? Right?
That's the thing.
Some guy come out of the goods and say, I saw Jesus. Is it a valid bet or not?
I think the only thing that he has to do is probably multiply fishes, create a huge barbecue, and turn water into wine.
Yeah.
So that
would be a great party.
So let's go to the slides of today. Let me share with the audience and with you guys. Let me do the presentation. So the first topic, strategy completes its 100th Bitcoin purchase. Has acquired 592 Bitcoin for 39.8 million at 67,286 per Bitcoin. As of today, they hold 717,722 BTC acquired at an average price of 76,000 Bitcoin per Bitcoin, sorry.
How amazing that you can still raise $40 million per week. This was the lowest that they can get, because last week Bitcoin was total mess. Not even Stretch, I think, get to par. So this is like the worst they can get is 40 million per week. Let that sink in.
Yeah, that is amazing, because we were previous week, he said he posted 99 and 99 was higher than 98, that better than 98. And we were thinking that they will acquire more Bitcoin that previous week. That week Stretch reached the 100 pair. But last week was super tough. One of the worst weeks for Bitcoin in the last years, even though they could raise 40 million US dollars and buy more Bitcoin.
Yeah, I would say pretty impressive. I mean, we know now that, I mean, strategy is like built for both the bull and the bear market. I think the multiple is still okay. They can still do accretive dilution because the MNAV is still, I would say, substantially above 1, not crazy, expansion like we see in the 2024 and 2024 run, but still it's quite a lot higher than 1. Whereas if you see the broader market of treasury companies, some of them are pretty down, way below 1%. The 1x multiple, like XXI from Jack Mallers, I think is like 25% discount. Strive as well is below 1. So strategy is really the only one with track record and to be really sustained this kind of multiple to be more than 1, which I think is very good for the industry and ultimately is good for Bitcoin because they can still accumulate with the common ATM or also via issuing a Stretch if there is demand and if the parity goes back to 100. So I think it's very bullish, to be honest.
So the MNAV as of today is 1.21 according to strategy website, and it's slowly climbing up. Yeah. The other thing that we notice is from the beginning of the year until today, MSTR divided by BTC, you have an uptrend, which means strategy is effectively yielding over Bitcoin, which is something that wasn't happened in the last months of last year. So that's another positive sign.
Yes, totally agree on that. Yes.
And guys, I have in front of my eyes the chart of strategy, which again, I mean, we all know that is pretty horrible, but I mean, they had 7 consecutive red months, which I think is like a record, a negative record, of course, but still they are able to keep the business model operating as smoothly as we see recently. They raise capital for the reserve. They can still buy 500, 1,000 Bitcoin every week. The multiple is still above 1, despite probably like an Armageddon on their own share price that now it's for 7 consecutive months in the red. So I think when all this massive pressure and selling pressure and shorting on strategy will be, slower or will be removed in the next months, I think we can finally see more certainty and more accumulation also from their operation. So.
Yeah. For everyone who are saying that strategy will go bankruptcy, that will get liquidated, this is the biggest proof that the strength of strategy, that even in the worst week in years, they were able to raise 40 million US dollars to buy more Bitcoin.
They say that we have a master in leverage, which actually was really tested in the last month, right? So I think they actually if they survive to this, which look like they are actually surviving with the flying colors, imagine what's going to be during the bull run.
Yes, totally agree. And let me go to the YouTube. I put a poll. I say, will strategy buy more Bitcoin next week? 100% of the voters say no. What do you think about?
100% say
No, that they are not.
Send the poly market link and
unless there are some kind of window in which they cannot operate for some US ruling or some
oh, that happened. Yeah.
Sometimes it happened during the year, but I think it's more closely to the end of the quarter. So I would say more in the end of March rather than the end of February. So I think they will buy for sure. And guys, I don't know if you saw this tweet on X. Strategy is the most shorted company on planet Earth in percentage of their own market cap. So the open interest is like 15% on the short position and is the most shorted one globally. So I think it's another test for us to say, look, guys, that's probably has been the worst case scenario. So 7 consecutive red months. Bitcoin went down 55% in 4 months. We had kind of an Armageddon. Everything is exploding. Strategy is the shortest stock on the planet, but still the multiple is above 1, and still they can still buy Bitcoin. So I think it's a good.
Not here. No, I don't have this.
Because we read it in the morning show for Latin America. Yeah, exactly that. But my point is that also a lot of that shorting might be related to arbitrage positions or carry trades.
True.
So I wouldn't consider it as a short, negative short, like purely shorting because someone thinks the price is going down. So take it with care.
Okay, take it with care. But anyways, again, Sailor Strategy is probably the most hated company in the traditional finance among the Bitcoin maxis because they were blaming Strategy and BlackRock because of what happened in the last time with the price going down, that we discovered that was not because of BlackRock or Strategy, it was because of the OGs. So, and even though they are getting more money and they are buying more Bitcoin, and Sailor will laugh when the bull run comes.
Yeah.
Let's move to the next slide. Smarter Web Company new credit facility. Smarter Web Company established with Coinbase, a $30 million credit facility in order to provide enhanced financial flexibility. They have 30 million in Coinbase just to buy Bitcoin in credit.
And do you know if they had to pledge some of the Bitcoin? It's like which kind of terms they disclosed or not yet? It's just the amount.
No, I didn't saw the full statement, but I only saw the tweet. But yeah, they have like a 30 million.
It's a lot of money.
Yes.
So.
And on this week, Smarter Web Company acquired another company in Bristol that they were doing some web design or something like that. So yes, they are growing. Adam Back, BSTR will buy 13,000 BTC. What do you think about that?
They're climbing to the top 3 with this?
Top 4. They will be the top 4 after 21.
I think again it shows us that probably the market is it was a bit overcrowded, but still if you can have access to the global capital and if you have like a good strategy behind you and you know what you are doing, you can still try to exploit this arbitrage, because we know that ultimately is a speculative attack on the fiat currency system. So as long as those companies and those OGs and big players can raise capital and exploit the system, it's good for everybody, I would say. So I think, again, if Adam Beck is moving, if also Binance a few weeks ago completed the billion acquisition, if other companies are lining up to try to buy more aggressively Bitcoin, I think it's a signal. Not necessarily that the bottom is in, but I think it's more signals aligning.
Yeah, it's all positive news in that side. The only thing that we need to wait now is for the Bitcoin to unplug from the correlation with the software companies. I think that's what's happening now. What keeping us on this level is the correlation is so perfect. Even this week, the rebound of this morning in Asia, we can explain it with yesterday. The IGB goes up like 1.5%, while on Monday they open out like 5% down, Bitcoin 5% down. So now that correlation is being tracked day by day directionally. It's incredible. I don't mean that this correlation will last forever. At some point, it will rotate. In fact, I saw a chart where you can actually track the correlation, and it's a sinusoidal trend. But now we are at the top. It's like 90% correlated. We need to wait until that correlation goes down again to 0 or something, and then Bitcoin eventually unplug from this trend that keep us stuck here. Or wait for the software to come back, and then we go together up.
Yeah, go together up. And also, I want to mention Adam Back, that is another guy that has been pointed, that he hijacked Bitcoin, that he appeared on the Epstein, whatever crap that everyone says. And Adam Back is a true OG. He is in every conference. He buys Bitcoin, and he's very attacked too, like Sailor.
Yeah, and I think, he also probably got some haters on X and on internet because he was very, very active in all the treasury companies. And again, it was very divided. I don't fully understand why. It has become very divisive in the industry and for Bitcoiners, this concept that if it's good for an individual, it's also good for a company, and it's also good for a family or a state. It makes sense. So again, I think he got a lot of beef for that reason first, and then maybe also for this Epstein, whatever it is. But again, ultimately, I think it's positive to see more companies pushing and trying to keep this speculative attack, because at the end of the day, it's the only thing that really matters. So
yes. So let's move. Well, Strategy World 2026 going on in Vegas was the day one. Sailor give a keynote speak. Were you able to watch something?
Not yet. So guys, if you watched it, please tell me what he said.
Well, I just watched the Sailor opening, which was again a masterclass on financial capital, digital credit, digital capital, digital property, all these detailed difference between all these instruments that allow him to design this machine that now we are running on. But it's because he's clear on this differentiation that eventually nobody see yet. That's what I call it, a financial innovation, right? It's amazing that they create something that didn't exist before. And the rest of the thing was more related to explain the particular instruments and why Stretch actually become the king of the prefers, because they see it as a iteration process where they have Strike, Strife, Stream, and what is the other one? Well, the four one, and then it's a Stretch, the last one. It's the last phase of the iteration. So it's, that's why they say that it's just the process of getting better at the design process.
So yeah, we didn't have many time to watch because it was during the night here in Hong Kong. So we were sleeping. I assume you the same in Indonesia. So we will recap today, and probably for next week, we can do a better in-depth opinion on all the event. And the last one, what you suggested, Marco, Basel's 1,250% mistake. International banking regulations are remarkably punitive to Bitcoin exposure.
Yeah, I think it's a very interesting paper, which I advise everybody listening to try to give it a look. It's like a 20-page PDF. It's not like a very massive one. It's not very technical. It's pretty easy to read. There are also plenty of charts. So I think it's in like 20 minutes, you can have an overall understanding of the topic. So the whole idea is that Basel rule is like the regulatory body for all the banking system. And it has been improved by, like upgraded since the great financial crisis in 2008. But again, as of today, they never update the financial regulation, the financial understanding on Bitcoin. And so basically the idea is that if a bank has in their own balance sheet Bitcoin, in a hypothetical scenario, they need to have almost 100% of the value of the Bitcoin amount into a reserve, which again, it's almost nonsensical, because normally you have like a ratio which is much lower for like public equities if you hold commodities or if you hold other asset classes. So it's really very punitive. And again, it could make sense in the very early stage of Bitcoin, because maybe in 2010 to 2015, we didn't have much clarity about Bitcoin. We didn't have much regulation oversight on Bitcoin. But in 2026, still maintaining that Bitcoin is worse than, like, let's say, toxic capital makes no sense anymore. It has become a consensus that now Bitcoin is a commodity, that Bitcoin is a form of money or digital capital, call whatever you prefer, but still there is now clarity about it. And so it's very possible that in the next months or years, the Basel rule needs to update, especially if there will be Clarity Act in the USA or in other major markets that will try to push the banking system to enter into custody of Bitcoin, into try to facilitate the bridge between TradFi and DeFi and this kind of update. So maybe, Fernando, I can share maybe one slide out of the report.
But is this a Switzerland thing or a European Union thing?
I would say it's for sure European Union, but I think also to some extent, also the US banking system needs to follow the Basel regulation. And that's why all the Trump agenda is they really want to detach from this kind of regulators body, which are not even in the US, but are, as you said, in Basel, so in Switzerland. And so I think there is this clash between also within the traditional space, the traditional banking system, which is the US now wants to change the rules. And so probably they will try in any possible way to try to have their own governmental body to legislate into the banking system. For example, also a few years ago, there was a big debate about the SOFR rate and the LIBOR rate. So one in the past was linked to the London Stock Exchange, so the London banking system that was setting the interest rate also for the US dollars. And after years of debates and discussion, now they move into, I think, SOFR, which is a US-based mechanism to set the interest rates between the interbanking system. So I think similarly, they want now to try to separate themselves. And I think also Bitcoin at some point needs to be separated from this nonsense of the Basel rules. Because now, again, I will try to share here these slides because I think it's pretty easy to understand.
Does it have anything to do with the fractional reserve system?
I think more than the fractional reserve system is Basel is like all the ratio that the banks needs to have in reserves in order to keep the system more safe and secure. And everything started after the 2008 because the system was too over leveraged and they didn't have enough reserves into their own system. And so it's much easier if you don't have reserve to have financial crisis or to have some kind of breakdowns. But again, if you are too conservative or completely, again, discriminatory against Bitcoin or against some asset classes, you might have big distortion on the how banks might allocate money or how the system might work. So I think the idea for the US now is try to separate from Basel rules, have their own kind of committee internally in the US to gain more traction. And I think maybe they will also use Bitcoin as a kind of one of the main topics for why they need to separate. Because again, Trump said they need to become the Bitcoin capital of the world, the crypto capital of the world. They want to have Bitcoin embedded into the financial systems. And as of today, it's impossible because of this slide here. I don't know, guys, if you can see it or not, but
Yeah.
so basically they say in the Basel regulation that if a bank owns like AAA debt, you don't need to post any reserve or any collateral to back it. Why? Because they say, of course, that AAA bond is so safe that there is no need to external or additional reserve. Similarly to gold. Then you move down to the risk curve. So if you are like riskier, you need to have more kind of reserve. And then again, you see that Bitcoin is like completely out of any possible sense. It's like 3 times riskier or 3 times more speculative than the so-called speculative unlisted equities, which can potentially be a very small opaque company in some jurisdiction. So for the Basel rules, it's better to have this kind of very speculative unlisted equities rather than Bitcoin, which trades 24/7, 365, completely transparent, tens of billions of volume every day for like 17 years. So again, there is something to me shady, and we know why. They don't like Bitcoin. They really don't want, even more in Europe, they don't want Bitcoin to become this kind of alternative, this kind of pristine collateral, the new bridge for the financial system. And so they are as punitive as possible, but even, way beyond any means. Because again, 3 times more speculative than speculative unlisted equities, for me, is completely nonsense. Should be more maybe in the ballpark of equity, maybe between equity and all other equity, but for sure not this punitive assessment.
How old are these people?
I think they're
Probably they are
bringing
not
their own
old.
agenda. They have their own agenda, which is different from our agenda. That's all.
They are, I'm sure they are PhDs from these universities that they have their manuals and they study. That's why they say that. But I don't think that they are old.
Keynesian economics.
Yeah, for
That's
sure.
the point. And they are Europeans. I think that worse than all that they are Europeans. Europe is under a self-destructive agenda. So Europe is getting self-destructed. Sorry for you, Marco, because you are from there, but
I know.
It's a pity because they are destroying years of centuries of history. Is where our civilization came from, and they are destroying that.
Yeah, I think it's partially right. So yeah, I mean, it's sad, but on the same time, I think if we watch history, it's something that happened in the past in different, of course, different flavors. But at some point, you need to have some kind of awakening, some kind of shift. And when the shift will change, will be very brutal, will be very disruptive. And I think the shift is Bitcoin, to be honest. So as long as you hold something that has the Bitcoin or the properties of Bitcoin, I think you might face hard time, but at some point you will succeed. So I think they need to change this regulation even more if the US is really pushing into this kind of updating the financial systems and putting Bitcoin at the center of it. So I think it's just inevitable. We just need to wait some more, maybe years or maybe decades for that to happen, but it is what it is.
Yes, that's why we do this. We do this to teach the people that Bitcoin is the only. Yesterday, I don't remember who said about the politicians in our Spanish show or when I was doing my solo live, talking about politicians, and Bitcoin is our insurance against all this crap. So that's the thing. They want to control everything. These people want to control everything you do in your life, what you do, what you spend, the social media that you use. And sooner or later, this is going to collapse. And the only way that we have to get an insurance from that is through Bitcoin on self-custody. So that's the only way.
Yeah, and even more so that today that we are approaching Bitcoin is very scarce. In few probably weeks we reach the 20 millionth Bitcoin mined. So it means that for the rest of time there will only be mined 1 million more of Bitcoin. So it means that more than 95% is already mined, 95% is already distributed. So I think time and the window to understand Bitcoin is closing very closely for people that are allocated like zero to it. So people needs to understand it, needs to rush, needs to feel a sense of urgency, because things might move faster in the future and scarcity is real. And if we match it with the abundance that AI will bring, I think only if you have abundance on one side and scarcity on the other side, you can be really happy and fulfilled in life. Because if you only have abundance on one side and fiat money on the other, is a mess, because they need to dilute you, they need to print more money to offset the deflation out of it. So I think the crossroad of AI and Bitcoin are crucial, and people should pay more attention. They are paying a lot of attention to AI, which is important, but they are completely missing their pointing attention to scarcity. And for me, it's more important than AI. So interesting time, and let's see.
Yeah, because the question is, there are some people like Elon that say that the abundance that will be created by AI, eventually you will not need money, or money will lose significance. I can't see that happening, because there is always forces that where you have light, you must have darkness. Otherwise, the war always grow on wars and in contrast. If everything is perfect and a hypothetical world, I don't see that happening. So maybe the counterbalance part is that what you say, which is, if you have that abundance, now you need to have the scarcity. Otherwise, it wouldn't make sense.
Yeah, and probably, yes, you don't need money, but you will still need some power, or probably countries. And this can Bitcoin as a strategic asset, like Jason Lowry puts on the book software. So that's the thing. Of course, I think you need a balance, and the balance between abundance and scarcity. I think that this is the way.
Yeah, and the whole point of Elon Musk that is saying that in the future you don't need money, etc. I mean, it works only if you have a very hard monetary standard and as a foundation. So if you have like Bitcoin as a foundation, or you have a combination between gold and Bitcoin, and you kind of remove fiat currency and all the degeneracy of the fiat system, I kind of agree with him. But as long as you have this sovereign kind of big infrastructure on top, and you have AI, the end result will be printing more money, because you need to offset the deflation that will be brutal and will be powerful just to destroy the debt system and the credit system. So I think AI is very important, but scarcity is more important. Otherwise, you won't get the benefit of it. So only with Bitcoin, you can have a future in which you don't need the money, or you don't need as much money, because you have a hard monetary standard as a foundation layer. So those things goes together.
Yeah, I don't see it happening, going in the direction of only abundance. Also, because they will intervene some other forces, like, let's say you create robots and intelligence that is unmatched, and then everything costs zero. Your food costs zero. Your rental costs zero. You can live wherever you want. You can do whatever you want. Then at some point, you remove the human incentive to prosper in life. You will need to fight some other forces, which is, what the hell do we do? And on the side of the entrepreneurs, it's also, if we reach total abundance, then what is my motivation to keep
To wake
creating
up
things?
and do stuff.
So it's a weird thing to imagine. But who knows? Maybe it's a combination, somewhere in the middle. That AI and robotics is going to create abundance, is for sure. That is going to be deflationary, is for sure. But I think it's going to meet at some point of balance in between.
Yeah.
And maybe that's where Bitcoins come in.
Yeah. I think it's the balance is I think it's the right argumentation. I think at some point in the future you will have the cost that marginally will decrease over time because of AI and robotics combination of those two powerful forces. And again, if you have a hard monetary standard as a base, kind of the benefit of the system will remain within this new system, which is the system of gold first and Bitcoin on a second stage. And so it will remain on the people that holds majority of their net worth in gold and hopefully Bitcoin. And so, I think it's a balance of those two. If we remove from the equation the hard asset, I think robotics and AI would be pretty scary for the average people, because you will face at first a loss in jobs. Now it's like an amazing tool to be more productive, but in a couple of years, or when you have the combination of AI and robotics at full scale, if you are an average people, not really skilled, not really pushing forward, or you're like half the way through your life experience, it's not easy to reinvent yourself. So if you don't have a scarcity from Bitcoin, it will be very, very hard for you to have a decent life. So the balance is, I think it's a good point.
Now that you mentioned the fear to AI, yesterday we were showing another graph, which is by regions, is the relationship between fear and enthusiasm. So on the X axis was enthusiasm, on the Y was fear, and then they group it by countries and by regions.
Interesting.
The surprise was that Asia region, it's on that side, which is more excited about AI than fearful. Then it comes the English-speaking countries, which are more fearful than excited about AI. And then it comes Europe, also very fearful about it, not that much excited about it. And then we were trying to figure out why could that be. Fernando came up with one interesting point, which is mostly is the fear of losing your job, which is predominant in Latin America, number one, Europe, and the US, but it's not so important in Asia, at least in the most well-developed countries, like in Hong Kong, the unemployment rate is literally zero. Japan and Korea is pretty similar. If you lose your job, you don't give a shit. You will find another better offer in 2 weeks. So maybe it's related for that. Here, people is not fearful of losing their jobs, even if it is AI coming for it.
Yes, not only in the rich countries. In Thailand, I think it's the same.
Yeah,
I think.
Not sure in Indonesia, maybe in that tier of countries is different, but in the top tiers, it's people is not scared of losing the job.
It's not like in Argentina, for example. In Argentina, we have a saint, a Catholic saint, where people goes to pray to don't lose the job.
San Cayetano.
That's, I don't know if you but this is the. In fact, yesterday, an Argentinian TV commentator, he said that the governments have to ban AI Otherwise, people will lose jobs.
Yeah, I think the West in general is built upon Christianity, and Christianity is very conservative by nature, as a religion, as a mindset, as a way of living. So I think it's easy to explain why this chart for me. So in our Western country, we are pretty old age population. We don't have many youth. The population is largely like above 50. Largely still connected to Christianity and this conservative mindset. And so if you have like a disruptive technology like AI, you say, no, it's very dangerous. Let's stop it. We are fearless. We have fear, so we don't want it. Whereas on the other side of the world, in which you have different demographics, very younger, population, and people that struggle day to day to just survive, they want to have this kind of tool because it could empower them. So I think it's driven by age and driven by maybe also religious orientation or kind of mindset. And Christianity for sure is one of the most conservative. So I think might be kind of the reads I would have from this study, which I think is very interesting.
Yeah.
Yes. So guys, do you have anything else to talk?
Maybe not. I mean, from my side, I think not really. We cover what we wanted to, so I think it's okay.
Yeah, well done.
Yeah, it's been like a quiet week for strategy.
For news, not for the price. The price was shaking all over the place. We were in the rocket to the moon again, puking all over because of the G-forces of fucking volatility.
Yeah.
So now we need a week of light food and recover.
Yes, that's what we need. That's what we need now. On the YouTube, the 100% people who voted said that strategy is not gonna buy more Bitcoin next week. What do you think?
100%. If there is no regulatory friction, they are going to buy.
I think
they are going to buy.
Yeah.
They will not stop buying. So, Marco, thank you very much for your time.
Thank you,
next
guys.
week. And also, remember us, your social media, so people can follow you.
Yeah, only on X, Battistoshi93. So feel free to join.
Excellent. So, for everyone who is on the other side, if you like the episode, give us a like, subscribe to our channel, follow us on social media, and follow Marco on social media, because doing so, you help us a lot in our mission of painting the world orange. See you next week, and have a good day or night or whatever. Bye-bye.
Thank you.